Hey guys, and welcome to LUX Chats at That Creative Hub. Today's special guest is Steve Emms from Speaking Finance. Mate, thank you so much for jumping on.
Yeah, thanks for having me, mate. It's really good.
Mate, you and I have been friends for a few years now. We've certainly spoke finance, a few beers, that sort of stuff as well. You've
More
obviously
beers than finance.
more beers and finance, the beers and finance chat at LUX Chats. But we've actually been talking about asset finance for a long time. We've been talking about business, talking about growth, diversification. But let's just go back to guess. One thing that's quite different about you is you're really staff focused. You do look after your staff quite well. You're always hiring and firing, but that's obviously you've got to clean from the bottom up.
Yeah.
But what happens there is your systems and processes are actually one of the best in the business. Let's talk about that. So first of all, what is Speaking Finance, and second to that, what key elements are you looking for in staff?
Yeah, so I guess to start, what we're about, Speaking Finance, it was come from a bit of a, I'd worked at quite a few different brokerages that do the asset and equipment and all that stuff, and I got all my experience and really learned about what it was. And I'd moved across a couple of different brokerages over that time, and the best thing about that is you're able to kind of, because I think every brokerage has one or a couple of things it does really well. And I was able to go, okay, this is really good, but these things I didn't like. Like the first brokerage, as an example, was really not great at the staff contact, and they didn't understand that they saw them as vending machines, and they didn't really see, and they weren't interested in the staff development. And then the place after that, they perhaps went too far in the other direction, and then didn't really focus on how we were offering and what we were doing. And for me, it was, okay, I want to go out and take advantage of the experience that I've gained, and take the best from what those things were and build that. And look, I'm under no illusions. I'm not the first and only person to ever say it, but in our industry, because it's a lot of like buy an equipment, buy a piece of car, it's very transactional. People call, they go through the process, they get a quote, they take the deal, and then they move on. But for me, it's always about trying to really understand where someone's coming from, what their business is, and what they need to be doing, and look at things in a broader view, a more holistic view. Because I sit there and I'll go, oh, okay, yep, you need one piece of equipment, right? Or you need a car. That's great, but like, how's that going to feed into what you're doing? Or have you got a grander plan where you want to add 5 cars over the next 10 years and things like that, so that we can actually build a solution that suits that and allows them to do that.
So how are those conversations done? Are you doing those in person? Like I need to look at that. You're essentially like not only doing Speaking Finance, but you're almost like a business consultant or coach. You're helping make sure not only does the equipment fulfill their needs, but how it's going to fulfill their needs in there. So normally is it most important to get that piece of equipment, but you've got to look at usage as well. So return on investment.
Correct.
So obviously when you're putting that deal forward, you've got to put a business case forward as well.
Yeah.
Is there a certain amount of hours that a piece of equipment should be used per week? Like sometimes people spend 500 grand and they hardly even use the equipment.
Well, as you can imagine, that's always going to be based on what they're doing with it. And you'll, like, especially when someone's buying, say, a large piece of equipment like an excavator or a truck that's very specific to their business, you'll go, well, is there an option to rent it? Okay, yep, there's an option to rent it. And then what does that rent cost? Right, and then you've obviously got to factor in the fact that rent is effectively money into the void, because you're never getting anything back out of it. And then we'll go, okay, so you've rented it and you've used it over, a 6-month period, and you've said, oh, I've used it at least 3 days a week. And I go, well, the rent might cost X, but buying it will cost you less as long as you're using it at least 3 days or more per week. A really great example, we had a client, quite literally his job was to deliver gas bottles to the petrol stations, like where you see the gas bottles available. And we actually funded his first truck when he took over a contract. Then he called us 6 months later and he said, I've been offered an opportunity for another contract, but the problem is it's not going to be as good or as fixed as the first one. It's going to be a bit more ad hoc. And we actually had that discussion. We said, look, we can get you another truck, but I'm not sure if that puts you in the best position right now. And I said, are there options to rent somewhere? And he goes, yeah, I can. And we had that discussion and said, look, I think the best protection or the best idea for you is to rent that truck, do it over 6 months, and then we'll talk again and we'll go, how was that? Like, what was the usage? And he got to that 6 months and he called us back and he goes, mate, I was worried it was only going to be 1 or 2 days a week. It was 4 or 5 days a week. It was flat out. And I said, well, this is a no-brainer. So we helped him source finance, and I even connected him with someone to purchase
How's that
the
guy
truck.
going now?
Oh, business is really good.
Yeah.
And he has confidence because I'm not worried about the deal now. I'm more worried about helping these people make sure their business is sustainable, because at the end of the day, if they're not making money, I can't help them procure more assets and things like that. And if they're struggling, then that doesn't help me and I can't help them. So there's no real purpose behind it.
Yeah, but so let's talk about your team. Okay,
Yes.
so you've built up quite a team now. What does that structure look like? So you've got a GM, you've got a couple of salespeople, a bit of admin, and this is more just for the people watching, because some people are growing their businesses and obviously like chats as well. What's your structure look like?
Oh, well, look, it is a fairly flat structure, and the space that we sit in, it's very open plan. And for me, that's important, because I don't want to be that director who sits behind a door, because I need to be involved with my team day to day, and give them confidence to be able to come to me and ask me questions, because I want to utilise my experience to help them write more deals and get better service for the clients. So for us, it's just that open plan office. I've got 2 brokers at the moment, and I still do some deals, but generally I try to get them to manage them. Then I've got a girl on in Australia doing, initially she was actually doing admin, but we're developing her to like an ops manager so that we can help grow and focus on the bigger things, so I can less be in the business and work on that kind of business development. And then we've got an offshore person that helps tick off our compliance and just make sure
you've got 4 key staff, is that right, or 5?
So it's 4 including myself in Australia, and then 1 offshore. And then we've actually got a new person starting Tuesday. And
what are they going to be doing?
So he's playing a bit of a BDM role, but we're calling it internal or desk-bound BDM, because the view for me is we've built a database of 5,500 people in there. We didn't write loans for all of them, but we wrote loans for a lot of them, or they had dealt with this in one way, shape or form. And, I back in that people have a really good opinion and view of us. Like, we've worked really hard on getting people to go to Google and do reviews for us. And now, we're up to about 305 five-star reviews.
Might ask a tech question here then, if I can, just quickly. I'm just looking at something there, more an opportunity. So with 5,500 database, and we're obviously with the implementation of AI, is there a way you could scrape together your referrals and that sort of stuff as well? Because I think there's deals just sitting there. Have you thought about adding that into your business at the moment? So really just somebody techie to really just start mining, I guess, those customers and leads.
Yeah. So that's something that we are actually actively working on. So I have had a AI chatbot built. And initially that's just for the new inquiries, because we get web leads and inquiries. And for us, it's about hitting the ground running, whether it's on a weekend or during the day. And then they're given the option to complete an application or literally call us if it's during business hours. So it pushes them, here's the phone number, call, and they can reach out to us. Then the next stage 2, we're calling that Sarah, is the chatbot's name. So we had to give it a bit of I wanted to give it a bit of a personal touch, but 2.0 we'll look at that data and be able to turn that inwards and actually look at that database. But still, ultimately, someone needs to
What's
make
the
those
first
phone calls and
chatbot's
build
name?
that relationship. Sarah.
They're the first one though. There's chat 1.0 and then 2.0.
It's been the same name. It'll just do a different thing. So the first step was to handle the inbound inquiries for the new. But the next step is to really start to harness and work with the people who have got great opinions of us, and they work with us, and they've had great experiences. But we want to be able to be a bit more active and following up with them, and continue to be front of mind, because again, I don't think I believe that the way we're seen and the way people feel about us is all positive, but the problem can be if you deal with someone for a short 2 to 4 week window, and then you don't hear from them for three years, like it can be there's a lot. And even if they had a great feeling, it might slip their mind, because people are busy, people are working more hours than ever, and things get lost by the wayside. But for us, if we're able to spend a bit more time keeping in touch with our customers, then
because you run some customer days, you're running golf days, and you're doing a few charity events as well. So let's talk about what that looks like as well. So customer experience, and for those that are listening as well, I want to know there's sort of 3 types of customers. So are they self-employed at the moment? We're doing low doc still, and can you offer a solution for most if needed?
Yeah, absolutely. So we do a key focus. We are quite broad, but it's predominantly the asset and equipment, and then we do quite a lot in the business own space, which I'll happy to expand on in a second. But we do the consumer. So,
Yeah.
you know, little Billy is 19 years old, needs his first car because he's got a plumbing or electrical apprenticeship and he needs to get to and from work. We can help with that kind of stuff, all the way up to we've got a couple of clients that are running businesses where their turnovers in excess of $9-10 million, and you know, they need to buy fleets of vehicles. So we'll do 3, 4, 5 cars at a time and that kind of stuff. But for us, again, just going back to that service component, it's so important to go, okay, yeah, you need 3 or 4 cars.
Yeah.
What are you going to be looking at over the next 12 months? Because I talk a lot about, it was that client actually that we had a little bit of trouble with, not them, but they came to us and they said, yep, we need 2 or 3 cars. We said, great, good, we did them. And then they kind of drip fed. We got 3 cars here and then 2 cars there and 3 cars. And we got to a point we'd done 15 or 16 cars for them in a 4-month window because they were growing really aggressively. And then they kind of went, okay, we're looking at our cash flow. There's obviously money coming in, but we're a little bit worried because there's long lead times, 45, 60 days for invoices to be paid. And we kind of went, okay, well, let's actually have a look at that. And that was a really critical turning point for me. It was 3 or so years ago. And I went, okay, it's so important, especially for these businesses, to look at it holistically, because what a lot of people don't understand, banking in Australia is very conservative. Like, they're very cautious. And when it's property, they're far more active. But when they're assets and equipment or even business finance, they get very touchy and they're very calm unless it's secured by property. And what we had to do is, there's this problem where, so in that client's last financial year, they had a really strong profit, right? Now they then go, okay, yep, and they continue to grow and they put on all these cars, which is a liability. So that's a cost or an expense. Now the problem is, even if those cars hit the road and start making money day one straight away, the problem is the bank doesn't see any of that income until the next set of financials. So you sit there and you go, you've added $20,000, $30,000 a month of new liabilities, which is all going to be profit generating, because these guys aren't buying toys, right? They're buying productive work vehicles, and they've added all this revenue, but they have to be able to service any additional debt on last year's financials, because it was hard to find a lot of accountants a lot of lenders, that were really comfortable to use, forecasts, I guess, or management figures, because the reality is interim financials tell a story, but they usually don't use it for servicing, right? For allowing them to make those payments on the debt. So we're the situation where we went, great, these guys should be fine to be able to get, say, a $500,000 overdraft, which will help them with their peaks and troughs in their cash flow. And it was the hardest thing ever. But and we did manage to get it done, and we got a really, really competitive rate. It was unsecured, so the director didn't have to put up his property and things. But the reality was, it was a key turning point for me where I went, okay, next time or any time going forward, we need to sit down and go, what are your plans over the next 12 to 24 months? And let's discuss how we're going to do that, because a lot of business owners, they tend to think one step at a time, or they think ahead what they do. And then the problem is, you put on all that extra stuff, there's more clients, there's more revenue, but there's also more chance that you can have a client that
things can go wrong,
falls over, doesn't pay, late payer. And they actually did end up having a client go into liquidation, and it cost them, $300,000 or $400,000. Now it wasn't like going to break the company, but ate into their cash flow
is cash flow. Yeah, it's correct. A lot of businesses go bankrupt because they can't manage the cash flow.
And the one saying, the one term I use a lot is, and you have to think this way with banking here, how we operate is, you're better off to have the money and not need it in the form of an overdraft, so that you're only paying interest on what you're using, than need it and not have it. Because I'll tell you, like, there are lenders out there that will do it, but instead of it being 7, 10, 11% kind of thing like bank loans, you're talking very quickly 20, 25, 30, 40, 50%. And you don't want to go that way unless you really, really need to. And I'll discuss those kind of lenders with people if I need to, but for me, those lenders should only be used for a very specific circumstance. Like, hey, my suppliers called me up and they said that they'll sell me $1 million worth of stock when usually I'd buy 300, and I know I can put that straight in the field and make money off it straight away. And I'm like, look, quick turnaround, easy. Then we go that way. They pay out the loan quickly and they're off.
So let's look at let's throw a couple of rapid fire questions at you. So, first of all, most expensive piece of equipment you've ever financed, to a rough estimate?
$750,000.
What's that?
So I don't ask too much about what it is, but it's like a road recycling machine, something
Fantastic.
along those lines. So
That's
it
good.
basically takes the asphalt and sorts it through.
And say someone wants to buy a luxury vehicle.
Yep.
There is a tonnage. Sometimes we can minimise luxury car tax, those sort of things. Is there a couple of luxury cars out there that people can buy that have got some benefits to them? You can think of like G-Wagons and sort of stuff.
Yeah, like we're doing still quite a few G-Wagons. They're fairly popular.
Yeah.
The old school, obviously Lamborghini and Ferrari are the ones that people are drawn to.
Yeah.
We finance those. I've actually got one across my desk. It will beat the previous one. We're looking at about $1 million.
Have you driven any of these toys?
No, but unfortunately it doesn't work too well for me. I'm 6'4", and when I try to get into a Ferrari, getting out is nigh on impossible. I've got to crawl out, and that idea of the cool guy who gets in the Ferrari and gets out and puts the sunnies on, that's not going to work for me.
So you're more like
a
dump truck. Yeah.
No, I was thinking more like was it Wolf of Wall Street, the scene where he crawls out of the Lamborghini, and obviously because he's in a drug-addled state. But if someone was looking at me the way I have to crawl out, they'd probably think I was in that state because I've got to work my way out.
Work your way out.
I'm not built for those cars.
Maybe
Maybe a G-Wagon. But
let's talk a bit of luxury as well. So let's talk about you outside of work, okay? So moving forward 2026, where's that one place that's on your bucket list to travel to?
So we're so me and my partner are engaged, and we have been for a little bit now. Not too long.
I remember the day.
I hear a few people are saying engaged for 10 years. So at the moment, I'm not there. No, we're a couple of years in, and we're looking to get married in either Bali or Vietnam. I've been to both those places independently, but I really do enjoy them, and they give a very different atmosphere and vibe that I think is really
I'm
cool.
leaning a little bit towards Vietnam. I've done Bali 8 to 10 times.
Yeah.
And
Bali's a bit well trodden.
Yeah.
Which is
unique experience.
It's not necessarily my first appeal, but I always think that, because there's basically so many Aussies there, I think we're probably only a couple of years away from it being a next state in Australia or a new territory.
100%.
There's so many Aussies there, but maybe there's a comfort factor when you're running a large scale event that you need to get right.
You do.
Because if it turns into a nightmare and you're in a foreign country where you don't have limited contacts, it might be difficult. So,
well, that's only if you break up during the wedding. So, right. So next one.
I'll chain her in. I'll put her in a cage. So I'll make sure.
That's all right. We'll edit that. No, it's all right. Anyway, next one. Okay, if there was that luxury car or item or whatever that you'd like to buy, what does that look like for you? So money's no object. You want to travel. You want to have some fun. What does it look like? What are you buying?
You call me silly, but as far as luxury cars, that's not a high up on my bucket list. My actual current endeavour at the moment, I'm looking at buying an office for us for the business, because I feel like that's a real key milestone in our growth and the ability to be able to do that. So that's one of the things we're working through at the moment.
Excellent.
And I think that's it's a different thing for a lot of other
different
people.
luxury, but luxury means a few things for different things. But at the end of the day, it's peace of mind. Luxury is just it's a reward for effort. And if you, once again, and the same applies to you, you've been talking about leasing, which you've been leasing, and now you're looking at purchasing. You've been renting, and now you're applying the same theory. So that could actually lead into a bit of opportunity. So we are talking property quickly. I know that you and I spoke briefly off the record. So at the moment, with the new government
you're not going
schemes,
to have that whole conversation here of the off the record one. Don't talk about all of it.
no, we're going to capture just a little bit of it.
Okay.
But we've been talking about also do housing, you're doing assets, and you're going to try and give a bit of a hybrid here.
Yeah.
So with the new government schemes, 5% deposit, I deal with typically a lot of investors. For those that don't understand but or have heard this before, the term lender's mortgage insurance, LMI. We're going to make this nice and simple if we can. But effectively with LMI, normally when you buy an asset or a house finance, you want to tip in 20% deposit. So if the, for example, the purchase was $500,000, you tip in $100,000 deposit. Now, if there's a shortfall, normally you would tip in $50,000. The bank's going to provide an insurance, and you've got to pay that insurance over 30 years.
Yeah.
Now, there is a solution to that, which you've now been speaking to me about. Do you want to, in easiest form possible, explain what that is?
And just one thing that I want to clarify about what you said, because a lot of people I think get lost in it, but the key part is lender's mortgage insurance.
Yeah.
It's not your insurance.
Correct.
It's literally insuring them. And protecting them.
Mm-hmm.
Like if you wanted to drive your mate's car and he said, oh yeah, that's all good, can you pay for the insurance?
Yeah.
You'd feel pretty weird about that. And the last thing you want to do is protect a bank. That's not your business, right?
Yeah.
But so that's a key part. And the point is there that money's dead money.
Yeah.
Right. It can obviously be used to allow you to get into a property, but there may be different ways. And
So give us an example.
Yeah. So I talk about, so let's use those or we'll make it even simpler. Let's say it's a $1 million property and then you've got to put in 200 grand to be able to get to the ideal thing for most lenders. Because for them at 80% below, they almost never lose money. Right. And that's how they look at it. But, you know, times are difficult, cost of living's high. Even if you're earning a high income, it's still, you know, it still might take you a year, 2 years, 3 years. Like I think the average is even like 5 to 7 years to save a deposit from $1. So there's a lot of things that'll happen in that time. You know, property prices will increase over that time, and you sit there and you go, well, I needed a 200 grand deposit, and then 7 years from now I need a 300 grand deposit, and you end up kind of chasing behind, and you miss those opportunities. And the big one, if you were renting a property, that you're still paying that rent, and that's also dead money too. So we've been working with a few lenders and quite a few mortgage brokers, and really helping them help get the clients into a home sooner. Now, it is a bit niche in the way that it's suited for certain people. If you're, you know, buying a property and you just can afford it and that kind of thing, then it's probably not the solution for you. But that being said, what we've seen is a bit of a shift in mindset, because pre-pandemic and pre-interest rates going up, everyone was kind of like, all the mortgage brokers were saying, oh yeah, this guy's borrowed right up to the hilt. He can afford $1 million, and he ends up, you know, the client ends up going to buy a house that's $1.01, and then they have to try and scrimp and save, and they didn't seem to worry about it. But now, after the pandemic and after we've seen these rates go through the roof, yes, they're starting to come down, but people have got that bit of that reality check, I guess, and they're like, oh, okay, this is a 30-year loan, and rates can go up, and they didn't realise that rates had been low for so long, it can hurt. So people are going, okay, I can afford $1 million, now I'll actually dial it back a little bit and borrow a little bit less. But we're able to utilise, instead of either having to save that deposit, having to have that awkward conversation to go to family and borrow them, or if you just don't have family that have that kind of money, then, or even if they haven't got equity in property and things, you can utilise a personal loan. And
so you're borrowing for deposit.
Correct. You are borrowing, right? But we're doing the calculations alongside the mortgage broker, and we're going, well, after their mortgage payments are $4 grand a month, there's still quite a healthy surplus, so they're not going to be struggling and things like that. And we had one really great scenario where the client was sent through to us. She'd unfortunately been divorced. She earned quite good money and things like that. But she'd been divorced, and through that, the house was gone, but she was left with not a lot of money, and she, you know, mother to a teenage daughter, and she wanted to get back in the housing market. Now, she had about 20 grand to her name, and to be able to do that was going to be a really expensive exercise. Initially, the broker sent us to us and said, look, if you can get 20 grand, that'll be enough to get that bare minimum, do what she needs and get it. But we actually looked at the situation, and we utilised one of the tools that we built that we can talk more about to clients, that actually helps us show how much she could have saved if she borrows more. Yeah, sure. So we ended up getting her approved for $70,000 for the personal loan. And what we'd actually done is, by doing that, she was able to get the house, and different lenders were available to her, which the mortgage broker said. So initially her interest rate was going to be 6.69%, versus, and then the lender that we were then able to get into was more like 5.79%.
Because you're showing got more skin in the game.
Because she's got more deposit and things like that. So she was able to do that. She saved around $350 a month on those payments. She said basically she was earning quite good money, but the problem was it was still going to take her 2 years to save up that money to be able to do that. So she was going to burn close to $2.5 grand a month on rent. So she saved you know, close to, what is it, 30 grand a year on rent.
And she gets an asset now that can...
And she gets an asset now that might appreciate over time. And she actually saved $15,500 in alibi on top of that.
Could they, and just to put this out there, so say just in simple terms, they're borrowing for the deposit, they've borrowed $70,000, they move into the house, which is an appreciating asset. They could effectively, if they wanted to, refinance in a year or two anyway and combine the repayments. So that's it. So, mate, that's good. So not only are you speaking finance, so your asset plus home now.
So we don't do the home, but we partner with the mortgage brokers that do it. And again, at the end of the day,
another product
we're happy to have those calls from people so that we can put them in touch with the right people.
So you've
a key part of you know, it's the way you do business. And I think that's part of the reason why we align so well. It's not about doing everything. It's about finding your niche, doing it as well or better than everyone else, but then working alongside with experts that have their niche or have their field and partnering with them in such a way that if a client comes to us and they have a problem that we can't solve, then we're going to put up in touch with someone that we've worked with before that we have confidence in and they can trust the same way they trust us.
I think really, and what I get from this conversation, obviously our friendship anyway, but anybody that's got a challenge or wants to borrow money, go to you and you'll point them in the right direction. Which is good. So I do have one more before we close. So for those that are and are PAYG moving into their own businesses, and you watch a lot of business owners. So what's two or three in a minute? What's two or three things that people should have right in business before going to market? So they're just about to move from PAYG into a business. What's the most important attributes you need to have in business?
First and foremost, and number one by the Flemington Strait is going to be surround yourself with the right people. Yeah. Because whatever your business is, I have no doubt that if you're moving into that business, it's because it's an expertise that you're comfortable with and you believe in yourself and you know. But then there's so many different facets to running a business because you can, let's say a mowing business, right? You can be the best. You know, you're happy to mow lawns, you're happy to trim hedges and things like that. And I'll be honest,
mowing.
I've been told plenty of times that I'm not very good at trimming the hedge at home, and I get told off. So it's not as easy as you think, but that's your skill set and that's what you do. But then you go home, you do your accounting, you do your books, and do all these kind of things. And it's very tempting to go, I don't want to spend that money right now. I'd rather try and do it myself. But if you start making mistakes, it can cost you a lot more in the long run. 100%. And it's important to surround yourself with the people who can. A really good accountant that's going to be proactive and actually give you guidance and help you set up the right structure for your business and for your family and to protect yourself. One of the things I even heard from the other day, because it was actually a mowing business, the client's actually got his property and he's got quite a lot of equity in his property. And the discussion, I'd actually put him onto an accountant, and he was just going to go register for a sole trader ABN, which takes 15 minutes. And the accountant said, what? And I said, yeah. And he goes, so he's happy to take risk. If he does it as a sole trader, he's absolutely leaving his property exposed. If he gets sued or something goes wrong, it could be a disaster and he could lose his family home. So we've put him in touch with him, and he's going to talk about the correct structure, whether it be, trust,
so structure,
all this kind of stuff
important.
Around asset protection, and to be able to set up in the right way so that you can structure your business the right way and, minimize tax, legally and correctly and do it all right, to be able to do that. So surround yourself with the right people. But that means two things. It's not just surround yourself with the experts, the right accountant, the right person who's going to give you guidance on human resources or HR, because there are plenty of independent contractors that can give you that advice so that, when you do hiring, you got to understand there's rules and guidelines around that, and it's important. And then for me, someone like myself, a finance broker who's able to talk to you and able to actually help you understand that, we have these discussions where we've got a few of these startup businesses, they come to us and they've already quit their job. And I'm like, okay, you've made things harder. I can still do it, but you understand there's a more expense. But we talk to people where if they make some of these adjustments and set some of these things up before they've left their job, then, or even if it's, hey, over the next 3 months, you're going to build your runway so you can take off rather than have your runway be 2 days and give yourself no time at all. But the other thing is surrounding yourself with the right people there's lots of different networking, but we talk about LUX. And sometimes it's just the mindset. And we had a dinner the other night. I was on the Wednesday night. It was a fantastic venue and it was a great event, as they always are. And I remember one of the guys even spoke about the lonely journey of being self-employed. And it's a lonely journey. You can have staff, but the dynamic between how you and how they operate is always going to be a bit of a wall between them, and there has to be, because they'll make decisions in their own. What is it? The old comment from Paul Keating. It's like in the race of life, always back self-interest. Right? So your employees have got their thoughts, and I'm sure they always mean well and they want to work towards, but ultimately they have to protect themselves and look at themselves. And so when you're a director and you're making key decisions, and these decisions might not be easy ones, like you may have to go, unfortunately, I'm going to have to lay off a staff member, or I'm going to have to handle this situation and things like that. You want to be able to get people that you can lean on to ask questions and even just be a sounding board.
I think, so what I'm hearing there is asset protection and setting up with the accountant, so don't leave your job before that. the right people. Mindset is obviously important, but business mentor as well. So we need to wrap it. But I want to say, Steve, you've been an amazing guest. Thank you so much for jumping on.
My pleasure.
The LUX Chats, and look forward to seeing you next time. And can't wait to have you back in 12 months to hear about the new office and hopefully a ring on the finger. See you guys. Thank you so much for tuning in at That Creative Hub. We'll see you next time, and thanks for joining us.